Everyone, today we are going to go over how to use the RSI in the futures market, but also in general across all markets. A lot of these indicators that you can use within, in this case, Optimus Flow, you can really use on crypto, stocks, forex. You can really use all of these in a very similar manner. So today we're going to go over one, how can you use the RSI to look for potential reversals, and on top of that, how to really optimize the RSI so you're looking at more of an accurate length of time on a look back. What does that mean? Well, it simply means when you first pull up an RSI, the RSI pulls up to a 14 period RSI. Well, if you're trading something like, in this case, corn, which trades 5 days a week, then if you're looking at a 14 period RSI, you're essentially looking back 14 days. So you're essentially looking back 2 weeks and 4 days. So there's 5 trading days in a week for corn, and then if you look back 14 days, that's 2 full weeks and then 4 days of trading, which doesn't make a lot of sense. So what I like to do is I like to use pretty much anything that's divisible by 5. In this case, for corn, there's 5 trading days. But for other vehicles, for example, crypto, if you're trading 24/7, then you're probably not going to use the 5 period. So you do need to look and see what asset you're trading and how many days a week it trades. In this case, if we're on the daily chart, I want to use the 5, the 10, the 15, or the 20. So looking back 1, 2, 3, or 4 weeks, or however many weeks you want to look back. But that's where kind of the increments of 5 comes from. Now, what you want to do on top of that to look for reversals is you want to, a lot of the time, pair the RSI with basic horizontal levels. So in this case for corn, you can see here that we topped out, and I'll highlight this. We kind of topped out here back in April of 2023, and you can see here that we not only had this area where we really were potentially getting close to a double top. We didn't have an exact double top because you can see here that we did close higher than this, higher on 4/16 than we did on 4/2, April 2nd. But you can see we're starting to get close. Now, one thing that was really important here to note was the divergence that was showing up on the RSI. So you'll see here that we had higher prices shown by this very simple upsloping line. The price on March 30th closed right around 661. The close on April 16th closed up here around 676. So we had higher highs, higher closes, but then if you look at the RSI, we actually had lower highs here. So that lower high kicked in on the 16th of April. So technically, you would have had to wait another day, but notice here that this candle really showed the divergence kicking in. So a lot of the time, you can really use the RSI with these horizontal levels to get an idea of when momentum is starting to switch the other way. And you can do the same exact thing with the opposite, oversold levels as well. So what I wanted to focus on as well is using these boundaries. So generally the default option for the look back is 14 days, but then the default for the RSI for the upper boundary and the lower boundary for overbought or oversold is generally 70 and 30. Now for corn, you can see here if we zoom back, there were many times where the RSI broke above 70 and continued to move up. Notice how you pretty much had, second. You really had actually the RSI topping out right around 85 for either short-term pullbacks or longer-term pullbacks. So a lot of the time, just because the RSI is respecting maybe 70 on Apple or Google or some other type of instrument, whether it's futures or stocks or whatever, sometimes you do have to optimize the RSI so you can get a better signal. Because if you would have just pretty much said, all right, the RSI is above 70 any time over the last few tops in the market for corn, there was still quite a bit of upside left. So what you can do is, in this case, this is on Optimus Flow that we're using, you can change these thresholds. So instead of having the value at 70 for your upper limit, you can change this to, let's say, 85, or you can change it to 80, whatever you want to do. So 80 is definitely where we've topped out, and then on the bottom, you can see here that we bottomed out closer to 20 on the RSI, and you could even probably go down to 15 on the RSI to really get a stronger signal here. So now you can see that the RSI is a lot more defined as far as what are the upper thresholds, what are the lower thresholds. So you can see here multiple times, especially over the last, let's say, 4 or 5 times this occurred, you topped out here, and then the RSI also topped out. So this gives you a much better, I'm going to say, risk to reward, meaning that you know that you're getting very high on the top of the threshold. And so same thing here, you can see here that if we do this for the next one here, we also had a decent pullback. Now, not all of these pullbacks are going to be long-term big downside pullbacks. Sometimes they're going to be a couple days. So this is where sometimes using the RSI and maybe the Williams percent range together can really give you a better idea of when you are getting oversold or overbought. So for this particular case, you can see here that for corn, 80 to 85 is definitely your upper threshold, and then the same thing on the bottom where pretty much 15 to 20 is your downside threshold. So one thing you can do as well with the RSI, as we did with corn earlier with divergences, on the downside, notice how we were hitting lower lows back in June and July of 2022. So I'll highlight that there. But the RSI was actually showing divergence. It was hitting higher lows. So this is positive divergence, is when price is hitting lower lows and closing at lower lows. And remember, when you're looking at the RSI and it says close, that means the RSI is a function of the close. You could use that other ways as well. You could use it as a function of the high or the low, but the default and the most basic and most popular way to use this is using the RSI source as close. So you're looking at the closing prices. So lower closes, higher closes on the RSI, and then that was a very, very important reversal point for corn. Now if we look at the little dip here that we saw in November of 2022, here's your short-term low. Here's price very, very slightly below that 15 threshold. You get a slight bounce, you continue down. Here's your low again. And once again, here's your break below that 15 threshold. So being able to use the RSI is really something that can be very powerful. It's not the only way to look for reversals, but this is a great tool to have in the toolkit. That's why it's so popular. That's why a lot of people use it. But really looking at the asset that you're trading and really optimizing it to the time frame. So RSI 5 on corn, on stocks. For crypto, you may want to use increments of 7 because there's 7 days in a week. So if you're looking at a 14-period RSI for crypto, there is logic to that. You're looking back 2 weeks because there's 7 trading days in a week. So that's something I really wanted to focus on here, is how to optimize those inputs. And same thing here. Back in February of 2023, lower closes, higher closes on the RSI, and that was a big reversal point for price. And then finally, once again, in April, we bottomed out here short term. So I'll highlight that with a square here. And that was a short-term bounce, but then we continued down. But once again, notice lower closes here, and then you had the higher closes here on the RSI. So divergence, overbought, oversold areas are extremely important for using the RSI. Positive divergence is when you have lower closes on price and higher closes on the RSI. Negative divergence is when you have higher closes on the price, lower closes on the RSI, and that's where divergence essentially comes from. And then, as I mentioned, you can always use these overbought, oversold levels. And remember, you are going to have to optimize these areas because sometimes you're going to have a stock, a futures asset, or any type of trading vehicle that may not go all the way up to 85. Maybe it only goes up to 65, and that's considered overbought. So you do have to optimize this for each stock, futures, crypto, Forex pair that you're looking at to really be able to make that RSI very unique to that particular trading vehicle. So hopefully this video was helpful in understanding how to use the RSI for reversals and how to optimize the RSI, and make sure to look for more videos coming in the future.